Welcome back for my final daily report market analysis video with me, Richard, market analyst at Hantec. On Monday, the 30th of March, we're going to look at gold now, and this gold chart is consolidating. I sort of just first started talking about the prospect that the rally on gold had been starting to roll over early last week, and that rolling over, which I thought at the time may turn into a correction given the volatility, didn't really play out that way. We see here on the hourly chart, I was worried about 1585, well, that pretty much held and is now built into a pivot line, and is ultimately the sort of support line for what is turning into this consolidation rectangle on the hourly chart. It doesn't show as a rectangle or much of a consolidation yet really on the daily chart, because we've seen some sort of intraday chopping around and some varying candles, but certainly we can see that that is a move that is starting to play out. Now, there's interesting that we're still seeing these rising MACD, rising stochastics, and RSI above 50. So you'd argue that that still borders on a positive bias for gold, and given the fact that the moving averages are, well, you're trading above the moving averages for a start, but also they're now starting to pick up once more, there is this positive bias which is still in gold. However, capping the gains comes with this 23.6% fib line of the original 1445 to 1702 bull run. That's at 1642. You've seen that move capping that upside in the last couple of days, but equally we're not really going anywhere, interestingly enough, and hourly chart is very much sort of developing into this quiet consolidation. This positive bias which had been in the momentum is now sort of turning into an oscillation between 40 and 60 on the hourly RSI, so little real direction. Again, similar MACD lines, just now very sort of settled around that neutral point. So there is just a sort of an attitude of wait and see, I think, in gold at the moment. If you go onto our website, you'll read the fundamental analysis that I write on gold, and you know that there's sort of pull and push factors driving through the fundamentals on gold as well. So that's sort of one of the reasons why we're seeing the consolidation, I think. But certainly on a technical basis, we've settled down. But you'd be looking out for a breakout above 1642 to reopen the highs at 1702 again. Below 1585 sort of drags you back into sort of the belly of the breakout, really, which is 1550, 1560 area. But ultimately, I still see that corrective moves on gold are going to be bought into. Long term, I think the outlook is still very positive fundamentally, and I think the technicals still reflect that, given the fact that we're trading above all the moving averages and still maintaining the run higher. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.